Hi, my name is Jody Strum. I'm with John B. Levy & Company, and I'd like to welcome you to our 6th in a series of podcasts. Today, I'd like to talk a little bit about what you do if you're a user of capital in this crazy market. I think anyone that you talk to would tell you that they're nervous in today's economy, and you never know what's going to happen from one day to the next. Certainly, there's no sort of normal, and it doesn't matter how old you are or how much experience you have, you've probably never seen anything like this before. When 100-year-old investment banks crash and when the government has to step in to bail out insurance giants, I think we all know that we have a pretty big problem on our hands. So really, if you're forced to be out in the market in something as crazy as this, what do you do? If you're a user of capital and you have properties that you own or properties that you develop and you need money, how do you keep your head above water and come out of this thing whole? There's a couple of things that you can do to keep yourself above water. The first thing that you can do is keep your expectations real. It is what it is. If you're a debt or equity provider, you're the one calling the shots nowadays. So a couple of things to think about. Your negotiating power is not as strong as it used to be. And sometimes, if you're waiting for a better deal, a second one may not be right around the corner. So if you have something that works, you should probably forge ahead and get your deal done. On the other hand, if you're not forced to move, then maybe now is not the best time. The anomaly of crazy commercial real estate financing is over. The stuff that we're seeing now is really back to the basics. The last 2 years, you can pretty much just go ahead and wipe them away. We're back to real underwriting standards. You need to keep your expectations real when it comes to what life companies and pension funds will underwrite. And life companies and pension funds are still in the game. They're lending capital. They're lending. Second quarter was higher than it was first quarter. Fannie and Freddie issuance is up 66% year over year. So there is money out there. And if you need money, there's a couple things you can do to make your deal work. Institutions look at deals a little bit differently. And although they're still looking at them the same way they have been, it's not the norm for a lot of people who are used to doing Wall Street business. For example, leverage is a lot lower. Right now, I'd say the market was 60 to 65%. Now, there are certainly one-off deals that might be getting in the 70s, but you can expect your leverage to be around 65%. You can't expect interest-only payments anymore. You can't expect them to underwrite pro forma rents or any kind of trends. They're going to use tried and true historic expenses and in-place rents. Gone are the days of spec tenants and LOIs. They're going to want real, hard leases. Institutions are used to underwriting an asset and not a story. And there's a reason why their default rates, quarter over quarter and year after year, are negligible. So they're still playing the same game, and they're at the top of it right now. They're the ones offering the great deals at the great prices. So if you have a deal that doesn't actually fit into what is an institutional box, there are a couple of things that you can do to get it there. So if you have a non-cash flowing asset or a construction deal, you can put some skin in the game. You can dilute your equity and take on an equity partner. You can put your balance sheet up and get ready to sign on for some recourse even in this market. And those are the things that are going to help you get those deals done. There are still equity players out there that are looking for opportunity. There are also additional opportunities for you as a property owner or developer. Markets that are as tumultuous as this will open the door for neat and exciting things, stuff that you haven't seen before, or stuff that you normally wouldn't have access to. There'll be an opportunity to purchase notes at a discount on non-cash flowing assets, and there will be a chance for you to get your hands on those non-cash flowing assets, probably at a price that you normally couldn't get it at. So there are deals that are getting done, and as long as you keep your expectations real and you keep your eyes and ears open, you can probably get your hands on some of these deals. You can probably also get done the deals that you didn't think you could by listening to what's going on in the news. There are lots of people that can help you navigate through this process. Life company and pension fund business is a whole different ballgame. So get yourself a good mortgage broker that has contacts and let them lever those contacts to get your deal done. So even in a market as crazy as this, deals are getting done. There's money to be had. Keep your expectations real. understand your asset and how an institution would actually underwrite it, and keep your eyes and ears open for those opportunities that are sure to come. We'd be happy to talk to you about any deal that you have. We can be reached on the phone at 804-644-2000 or via the web at www.jblevyco.com.